Hi, Warriors. Good whip around Wednesday to everyone. Surasak, welcome to Face. Glad to have you. Bran, how are you? And AJ.
Morning, Coach.
Hey, how are you, Blake? Oh, let's see.
That's my name.
Yeah,
Good.
see, I remember you.
Hey, I'm
Hey,
glad. I'm glad.
Sinatra came in. Oh, you guys, James, Marcus. All right. So, just a thought I have here. We had this trend breakdown. And, I have to give it the benefit of the doubt, but, my intuition is saying that we could be surprised by a strong number on Friday. Um, it's a possibility. So you really don't know until we start getting back over 104.60-ish and you get back in the trend, back in the uptrend. But I think if this happens, that we're going to challenge these highs, maybe take them out. Um, that would take the euro down to like, this 107.60 level. We could have a continuation move, but I'm just, one thing that's um, making me think it could happen besides the yen being up 130 is where the 10-year is sitting right now. So, here we are at this 432 level back at this support level, but that's not what makes 435 so important. If you have a long memory, you'll know it in your head. And if you don't have a long memory, you just have to look left. And that was the 434, 33 level was a high that we had when people thought rates had peaked the first time. And then we had this big move. So we're right back to this level right here. Nice horizontal lines, had some action here. You have a little bit of you have a moving average coming in there at 428, and it just looks like, I wouldn't be surprised to get some kind of bounce in yields from here. I'll take it if it goes straight down, but it's an important level. So, that keeps me on my toes about the dollar. And we have Canada today, right? So BOC in what, an hour and a half? I'm looking at this and I asked
Yeah,
Ryan, yeah, I asked Ryan about it. Maybe, I mean, it's almost too obvious of a trade to short it in front of the BOC because they're going to cut rates, right? And they've been trying to squeeze people already this week. Maybe they have to take out some stops and make it look good for a little
but do
while.
they have to? And this is like this is up for debate. Do they actually have to cut rates? And will they? I don't know. I mean, I know they're supposed
Okay,
to. I know they're
okay,
supposed to, but
all
yeah,
right. So that would be the surprise. I thought it was pretty much a done deal, but it's still up for debate. Weren't they the first to tighten before we even did,
Yep,
Canada? Okay,
yep.
so wouldn't it make sense that they lead the way going the other way? I mean, it's
It,
possible, right?
it's possible. I think we're sitting perfectly bang in the middle of the range, 136, 138. So there's enough scope, I think, and I'm looking to trade either side of that range because I think unless there's some huge news,
Yeah,
if they don't cut, then you're going to see the CAD gaining, but it's probably a dovish cut, so we'll probably test the bottom. And if it's a cautious cut where they don't say there's going to be another 10 afterwards, we might get a little
yeah.
pop up to those highs, 137 highs, at a stretch 138, and then I'm gonna park the bus.
Because this will get everyone bullish if we break out over this line here. They'll call it a breakout of I don't know, triangle. I don't know if you could call
Yeah,
it a flag, but some kind of triangle. The upper line, I think Blake had this as a triangle, and then we started trading underneath it, but this line still looks pretty valid. So,
well, we
um,
could break it to the upside, and then 15 minutes later, the ISM comes out and it's crap, and we're back down again.
yeah, that's what I mean.
Yeah,
I'm not interested in the long side of the dollar. I'm really only interested in looking at spots to fade dollar strength, unless we ever take out this 106.40 level. Until that time up here, I want to play it because I don't want to miss the move under par, which I think is going to happen this year. And I've been trading it a lot, and you know, there've been some decent swings, like this recovery rally here and here and here. But I mean, they're not big trades. But I do think a big trade's coming, and maybe this morphs into more of a descending triangle from 104 to 6.5. And a lot of people talking 102 being a key area. I think even Ben, when he was on last week, who's a dollar bull, says it needs to hold 102. So, I want to be short dollars, so I'm not going to be a perfectionist, and I'll even hold my dollar shorts and sell
Yeah,
more up
the
here.
fact that it's holding below that broken trend line, I see it as it's a broken channel. I think that's a pretty key development this week.
Yeah,
And
it is. Yeah.
yeah, and we do have so much data coming out between the ISM, ADP here in just 9 minutes actually, um, and the NFP, and even the weekly jobless claims. So there's so much, but still the dollar, the fact that it can't muster any type of rally, it's pretty telling at this point.
Yeah, but one good report on Friday. I'm just saying, um, I I'm short the dollar, and even though I think it could rally to 5.5, it's a possibility if we get a strong number. Instead of going, oh shit, it's yeah, let it happen. Gives me a chance to build a bigger short position in the dollar. So that's the
That's
way
the
I'm
key thing.
approaching it. Huh?
Yeah, having a core position. It doesn't have to be big, but
Yeah,
you manage it, and if you get a rally, then you hit it, and when you
yeah.
get a dip, you take some off, and you just leave a little bit on, and you just build up a position over time. And if you
That's
do
how
get your move,
yeah, that's how I'm sitting. Because
yeah,
I
that's
do
what I
think
do.
there's a puke job coming here. Yeah, because I still believe in what TLT is doing. That was that was a graveyard save last week at shade under 89, and now it's on the verge of threatening a breakout. So this could pull back to 91 on a good number, just like the 10-year could pop. But I think that we're on the verge of confirming um, this pattern from here. I mean, that looks like a breakout to me. We're over
It's a
92.
huge breakout, Dale.
That's,
It's a
yeah,
if did pull. I mean, you can pull up the 10-year, or
yeah,
the ZNs. I mean, the notes look there. I mean, it's a breakout. I mean, I know this is the uh,
yeah,
same thing, but that's just another indication that the dollar is going to stay pressured too.
yeah. That's the key. So basically, I guess you could say I'm a bomb bull and a dollar bear, which sounds kind of strange, but that's the way
No,
things
but
work
why does it
nowadays.
though? I mean,
Because
what
why
did you
buy
say?
paper? Huh?
You say you're a bond bear, but
Bull.
wait, don't, no, that's not. There's nothing. I mean, why? If we have, let's say we get a risk off episode. I know it sounds silly to say, but if we do, people are going to be buying bonds. Will they be selling dollars? If you look at the way the dollar reacted in the dot-com bubble, which I would say that today's day is very similar. Today's markets are very similar to what we experienced in 2000, 2001. You're going to
Interesting.
have, we had dollar weakness when the stock market was coming unglued in 2002. So
Okay.
it
All right.
is possible that the dollar can sell off when stocks go down.
Yeah, but the bond. Why do bonds appreciate It's because it's a different instrument than it used to be.
It is. If I don't think I'm going to see if I think I'm going to see negative returns or flat returns in the stock market, why wouldn't I be picking up 10-year notes right now, or even the longer end of the curve, or maybe even the shorter end of the curve?
But if they're denominated in dollars and you're in a bear market in the dollar, that fundamentally argues for higher rates longer for people to take the duration risk.
Yeah, but
So
still, if I all I care about is safety and not losing money, then
yeah,
I'm going to buy bonds and notes hand over fist.
maybe buy bonds in the euro if the euro's going to 120 more than US
Patrick
bond.
said it pretty well. Dollar smile, not linear. It's true. Everybody thinks that, oh, it's a dollar smile theory. It's been a dollar smile theory and it's worked for the last 15 years. Doesn't mean it's going to work all the time. Nothing does.
Yeah.
Right.
So,
Great point, Patrick.
Yeah. See, well, we have a lot of intelligent guys in our community.
Yeah, absolutely. 100%.
So here's what I'm looking for in risk: new highs in S&Ps and a lower high in the Dow, say around 39.5 or so. If that develops, and you could see how it might develop, because the Dow's it's about unchanged with the S&P's up 14. So we're not that far from new highs, and the Dow is. So especially you look at the structure intraday. Look how weak that structure is compared to that, ready to push new highs. Maybe, but I don't think the Dow will. So up around 39.4 to 39.6 with stops over that 40,000 high is what I'm looking at for risk. And that's it. I want to bring the guys in, and let's start with Kman. K, why is the yen up?
Hi, Dale. Hi,
Good
everybody.
morning. Why is the yen up 120 today?
Because there's less panic sales on the carry trades, MEX in particular. We're also seeing the Swiss turnaround just a little bit, and
wow.
We had a little bit of underpinning of the Nikkei as well, and that kind of correlates with yen as well. And then had a couple of tries under 155, which is a bit of a level, and that's been rejected. We had the real wages out quite strong. Oh no, we had the headline wages out quite strong, the first ones for the new fiscal year. But then again, the real wages are still remaining in the negative territory. And once they came out, we saw the JGB yields come off a little bit, and the yen started to weaken. And that's the whole hairy hindsight explanation of what's happened over the past 12 hours.
And we have a new Bitcoin.
Huh?
The Nifty is the new Bitcoin.
Yeah. Yeah, that's a funny one.
You want to trade some volatility, guys? Trade the Nifty.
Yeah. Right, you probably bought it high, sold it low, and now in the middle wonder what to do.
Well, I'd be crying first before I'd wonder. I'd have to get it out. The DAX looks like it has another high in it too. Blake, didn't you have it was a harmonic pattern
in DAX?
I think I think it points to higher still.
Well, yes and no. I mean, it could, but the thing is that top is the 127% extension. So theoretically, it has completed a butterfly pattern. So it's
complete.
Yeah. Oh, matter of fact, I need to take the charts. I'm sorry, Dale. It's we have ADP like literally in a few seconds. Hold on. I'm sorry, and then we'll go over to the DAX. Let me grab. Here we got the dollar index right here. Here's the ADP, and we've got about 30 seconds to go. But yeah, that DAX reaching for the high, and I'll show you here in just a second. It is a Gartley pattern. It is complete, but it's still, butterfly. It could still reach for the 161% extension. If stocks wanted to go, but we'll see. ADP. So today's a really interesting day. You guys remember? Well, actually, Ryan, do you remember how long ago the Bank of Canada shifted its meeting times around our data? Do you remember?
Yeah, was it December, September, December?
Yeah, just
Slightly lower.
whoa,
Oh,
hey,
weak,
look it out.
weak.
Look out. There goes the dollar. And revised down from the previous month too. So previous month was 192, revised down to 188. Remember the data flash you get here with ForexAnalytix. You can find it right here in the calendar tab for those of you that want to know where that's at.
Look, and you could keep your Twitter on this too. Your personal Twitter feed, you could also program to it.
Oh yeah, absolutely. You can keep your Twitter and add to it. We preset you know, some things, but you guys can, you know, obviously add to all that in the settings.
You don't have to leave this platform except to execute your trade.
That's right. It's a tool for all traders. And by the way,
I've been called a tool.
you are a bit of a tool, Dale. This sale is coming down. Our developer is at lunch right now, so he's going to be bringing this down here in the next couple hours. Just so you guys know, the summer offer will expire. So if you guys want to get the trader funding program, get entered for the $100,000 giveaway, a $100,000 assessment, you have to buy a semi-annual or annual, and that's at our discount price. And that discount will be down, and you probably won't see it until several months from now. That price again. Anyway, going back to the DAX, well, you can actually find the DAX right here, Dale. Let me just take you over to the DAX, and you can see what I'm talking about. So, whoops, that's not what I wanted. There we go. So this is the butterfly pattern that I see right now. If it wanted to extend, the butterfly pattern could take us to the channel top. So it could take us, if this pattern extends itself, it could look like that. So it could be up to channel resistance if we decided to move. But the fact of the matter is, and one of the reasons why the European markets, or excuse me, the German DAX is so supportive right here, is the 50 DMA and the channel support.
Yeah, it's do or die here.
Yeah, it is. And they know it. I mean, that's why it rallied significantly today. Yeah.
They have a plunge protection team in Germany too.
That's right. They do. And so you know, we knew that it's really, really big support here. And it's obviously bearish if it breaks down. So that's the obvious now. So I love it personally. I love it when you can look at a market and say, this is where the breaking points are. And that is really the case pretty much for everything in FX right now. We know the euro above 109, you know, it's going to be really bullish. Well, actually above 110 is going to be really, really bullish, but the ECB is going to have something to do with all this in the next couple of days. Cable is at 128. Aussie is at 67 cents. That, by the way, is the multi-year trend line right there. Kiwi at 62 cents. All the breaking points are here. Yeah. Dollar Canadian, you guys know it's at 136 or 135.85 and at 137. Period, end of story. I can talk about the dollar max in a little bit. Dollar yen, I mean, you know, it's very similar to the DAX right here. That's you can see exactly where, you know, key support is, would be right there around 154. You know, so the FX market, we all know where everything's at. The issue that I see, and this is one thing that Dale just brought up, is that the 10-year, and here's your 10-year notes. I mean, they're in breakout territory. We're above the 200 DMA. We're above horizontal resistance, and we're nearing the 50% retracement. So,
yeah, that's going to take out the last year's highs.
You know, I mean, I don't know if we're going all the way up there, but I sure as hell wouldn't want to be short right now.
Well, I'm just looking at equality from the low that you had in October of 23 to the high near the end of the year, and then tack it on to the bottom down there.
Yeah, I mean, ABCD pattern would take us probably to the 127% extension up there. And is it possible. Hell yeah, it's possible. And I don't. I've had a hard time coming to grips with being a dollar bear in a
Bomb bull.
bearish in a bear market, like, because I'm not a stock market bull at this point. I think the stock market is now starting to look very vulnerable, and it has for the last couple of weeks. I was hoping for a continuation rally for the last couple of months, but now it's looking fairly dicey, because if you look around at the other markets too, not just U.S. equity markets, it's all looking a little scary. So if that happens, it wouldn't surprise me to see the bond market finally find some buyers, despite all of the supply that's hitting the market. And how's the dollar supposed to react? You'd think it'd go up, just because we have such a Pavlovian response to equity markets coming down over the last 20 years that the dollar is going to catch a bid. But again, I'm just going to reiterate, and I'm going to go back and just show you guys. And I don't want to use that chart. I'm going to use a E-minis. I think that's the chart that we can use. So you go back to, back here. And this is the .com meltdown, right? And just add the dollar here. And you can see that the dollar got smoked during the and Kman, Ryan, you guys were probably trading FX at this point. I wasn't. I was trading equities and shorting every internet stock known to man at that point. But I wasn't. We didn't have the ability in the U.S. to start trading the FX market till about 2001, and I really started trading around 2002. But what you notice is the stock market recovered after the .com bubble, and the dollar continued to get blasted. And so for those of you that haven't traded, the markets for the last couple of decades or more, you don't know that. All you know is stocks come down, dollar goes up. That's all you know. And I think you have to be really, understanding that it doesn't always work that way, and correlations don't always, they will break and they don't always work. But Ryan, did you trade FX back then? Is that what you were focused on back in the .com era days?
Yeah, I was dabbling around in FX in them days. Yeah.
Okay, man, you were on FX trade desk. Why was the dollar so weak at that point? Do you recall?
Because inflation was dropping and yields were coming down.
Okay, so yields were coming down, and disinflationary pressures following the .com meltdown, and that, I mean, you could think it could theoretically be the same here in the U.S. If we saw a stock market sell off. You see retailers like Walgreens and food services like McDonald's. You got Target also. Everybody's slashing prices. Maybe we have some more disinflation coming. Might be in store for us if we do see an equity market sell off, right?
Just Mandy saying like Kuwait. You mean the Gulf War? And that was 1990. That was way before then. But okay, sorry, Blake. I was just looking in the comment.
Yeah, no problem. I just wanted to point out, guys, that if you don't think the dollar can't go down if stocks go down, just take a look back in history a little bit. It's entirely possible, because I know, like I said, the Pavlovian response to stocks going down is I need to buy dollars, but maybe this time around it's I need to buy the bond market. Right, Dale?
Yeah, lock in rates as they come down.
Yeah. If I'm not seeing north of 5% in the equity markets from current levels, I'm going to be buying bonds, and I'm going to be buying notes, and I'm going to be buying even some short-term bills. Who knows if I'm an institutional person? But anyway, just something to be thinking about as we move into this summer, which I think volatility is going to be quite high. Let's talk real quick. about the Bank of Canada. Well, we have ISM, and remember, Bank of Canada happens literally at 9:45. I'm doing East Coast translation right now. So it happens at 6:45, which would be 9:45. We have the Bank of Canada, right? Yeah, at 9:45. Then the ISM 15 minutes later. Then the Bank of Canada press conference 30 minutes after that. So the Bank of Canada has moved their times around, several months ago, based on releases that we have here in the U.S. So with that all being said, Ryan, what are your thoughts about the Canadian today? Are they going to pull the plug and join the Riksbank and Swiss National Bank in cutting rates?
I'm 50-50. I'm really 50-50.
You are absolutely zero help right now. Just kidding. I'm joking. Why would you say 50%, 50-50?
I think the dovishness has ramped up really too quickly in the market. The data suggests it. Macklem said early May, they're getting closer to cuts, but their last statement, they didn't have the confidence, and they certainly weren't talking about cuts in earnest. So I don't know if it may just be a bit early, and they just want to tempt the market, just tout a future cut rather than cut now on that side. But then on the other side, they've got the data that core number, inflation number, dropping to 1.6 from 2%. That's the first major to get a core number under 2%. So they'll be looking at that as well. So that's one 50-50.
Okay. Kman, are you going to be any more help than Ryan?
60-40 for a cut.
Okay, there we go. See, that's all. I just wanted you to tip the scales a little bit. That's it.
It is that close, right? So
it's a
they might be getting a little heat from political heat, because in Canada they have, I think, only 10-year mortgages, and the real estate market is under more pressure.
Yeah,
because people don't have 3% 30-year mortgages in Canada.
Yeah. Well, that is one thing, and then as already mentioned, the inflation is dropping, and I have the impression that Macklem will try to lean more dovish, but then Rogers is not a dove at all, so it's going to be a bit of a bun fight between two of them. But I would say they went first. Now they could be the first ones to go. So I don't have any cash position, but I'd love them to cut. I've got a bit of a dollar cat call in the mid 137, so I wouldn't mind a blip up there to start hedging it.
Well, I want to ask you guys this, this is going to be a freebie for all of you guys listening to the F.A.C.E show today. These are the levels that if you are a Swiss bear, you want to be buying here, and we are finding support at the really key 97-cent level for the Euro Swiss. If you've been in the ForexAnalytix community, we've been talking a lot about it. Some of you know that I'm already establishing some longs here in the Euro Swiss. Kman, do you think this has been enough? We've seen enough Swiss franc strength following Jordan's comments, following the Swiss inflation data that came out.
Yeah, I think if you're looking for a retracement, that would have been your ideal level, 96.70 on the Euro Swiss. We've been highlighting that on all the shows, I think, for a while. So I've started too. Brian says, do dollar Swiss? I'm not sure, because I'm not sure about the dollar with all the news data that still have to hit. I prefer to err on the cautious side dollar wise, but we have a very good level, dollar Swiss 88.80, 88.90. You got the 100 or 200 DMA there. You got a retracement level. You got, if you look left, that 88.80 has been trading many times. So there's your level on the dollar Swiss. If that,
And let me highlight this real quick, Kman. That's 161% extension, the 200 DMA, the 38% retracement. And it's not only the 38% retracement on the dollar Swiss, but also the Euro Swiss that I was just highlighting there a moment ago. Also the 38% retracement. You can see it right
Yeah,
here.
so you have
Now,
How,
if
when
you're looking for retracements, you
how
have
do
your
the
right here.
metals look to you, Blake?
they look well. I'm surprised gold hasn't done anything. I'm first of all, silver is, in my opinion, bearish now because now we have a double top in play. But gold, I mean, it's like stationary, and if we break 2280, then it's all over. But we're going to have to see some dollar strength in order for that to happen.
Right.
And we got obviously a
tough
lot of
call
hurdles
from here.
this week for that to happen.
Yeah, really got hammered yesterday, and no follow through.
Yeah,
But
there's
anyway,
been zero follow through on. I mean, you can see
Yeah.
the range is pretty clear here in gold. So I
I
think.
still think that your 1.618, 2247, or 1.272, that we'll see that.
I would be. I mean, again, we're going to have to see some dollar strength come through the market, and I'm
Oh,
not.
there's your double top targets at 20 back at the breakout.
Yep, that's it right there. In the
Wow.
event, and
Yeah.
anecdotal evidence. I'm just going to tell you guys. I can't tell you the amount of people in the last
love
2 or 3
gold.
months that have nothing to do with anything market related that have been sending me pictures of the gold bars they bought at Costco. They've bought gold at, like
Yeah.
I've had, like, it's the weirdest thing. The first time literally in my life I've had people in the last few months text me and show me all the gold that they've been buying, like random people that that know that I'm in the markets, but that have just been like, hey, what do you think of this? Look, I've just bought some gold, bars. And I'm like, oh boy, people that never buy anything that they never, broadcast to me that they're doing it. It's just that little evidence right there, anecdotal evidence, is the stuff that really scares the crap out of me. But anyway, I just,
Good. Let's shake them out.
yeah, I mean, that's the thing. It's like, if you really want to be a buyer of gold, if we ever see the 200 DMA again, in the next, I guess in the next couple months, this is where I'd be really attracted to be a buyer. I mean, I'd love to buy
Shouldn't
some
get
gold.
down there if it's good. Kind of,
Yeah.
I don't know.
I don't know. It's a
All
tough
right.
call, but I want to say, Ryan, thank you very much for your 50-50 call. And you know what, jokes aside, because I'm harassing you so much, I'm with you. I'm 50-50 as well, but I'm glad Kman's 60-40 on a cut. Maybe gives us a little bit more edge to think about with the dollar CAD. And then Dale, thank you for your views on the bond market. I think you have called the TLT right for literally the last couple of weeks. So guys, just remember, last thing I want to say before Dale takes over, this sale, this blue stuff that you see here, this beautiful blue that our designer has done, it's gone like literally in about 2 hours. So if you want to take advantage and get get into the drawing for a $100,000 trader funding program account, that disappears in just like 2 hours. We extended it because the first was on Saturday. So we had a couple requests of people asking if we can extend it, for payday, whatever. So that's happened, but we will be taking it down in a couple hours. So take advantage of it right now. And Dale, have a great interview.
All right. Thank you, Blake. Thanks, Kay. Thanks, Ryan. Good luck today, my trading warrior brothers. Good luck. Good trading.
Cheers,
and
all.
Jerry, hey, all right, Ryan. And Jerry, welcome back. I know you're long the world, right?
Can you hear me okay? Am I coming through? Okay, good.
Yeah, loud
Hey,
and
Dale.
clear. Knowing your style and your discipline, I'd say you're long stocks, you're long Bitcoin, you're long silver. What aren't you long? The dollar breaking down?
The dollar breaking down, sure. Yeah. So no, we are long. We're long the NASDAQ 100. We're long Bitcoin,
Yeah.
also gold, silver to an extent. But yeah, I think, even though there is, Dale, even though there is this overhang of debt, even though there is this concern about the macro, and there's always something to worry about. There's always a reason to sell. And based on all the stuff I've seen, over the last, for example, when we went through 2022, Dale, that was rough, but that was a great opportunity when you look back. And as we entered into 2023, and then we got into 2024, there's still about $6 or $7 trillion sitting on the sidelines. And we talked about this before, Dale, is that it's that recency bias. There was a poll that was put out just about a week or two ago by Harris. It was a Harris poll, and they asked people, random people, hey, so do you think the S&P 500 is up or down for the year? And half of the people said they thought it was down for the year. That they asked people, and of course it's not. It's up dramatically. Relatively speaking,
because the market is in the economy, and those people can't afford to own a stock.
That's it. They were also asked, hey, what about unemployment? And half of the people said it was at a 50-year high. It's not. It's at a 50-year low.
Yeah.
They also asked about, are we in a recession? And over half of them said, yes, we are. And yet we still have GDP expanding. And so there seems to be this recency bias because 2022 was so rough in the market, because inflation was so bad in 2022, and now it's coming down. It seems like people are kind of stuck there. At least some people are. And for us, this has been a great opportunity.
You read the book, A Tale of Two Cities. It's the best of times and the worst of times.
Yeah,
here we are.
There you go.
Here we are. And let them eat cake. Okay, well, so I mean, it's bifurcated the economy.
It really has.
So a lot of people can't make it paycheck to paycheck with food prices. So of course it feels like a bad economy to them. But it's what is it, Jerry? The 10% that are benefiting from asset price appreciation between their homes. They have all that equity, and they have gains in the stock market, and that keeps fueling itself.
Yeah,
with
that's
that,
true.
Right? They weren't, even though they probably received COVID money, these people, and they should have declined it. They don't need it. A lot of people needed it. It's gone, and they're maxing out their card. So yeah, I guess. In fact, the bonds look pretty good to me, Jerry. I want to ask you about that, but I want to talk about the dollar. And what is bad for the economy is actually could be super bullish for assets, because you have yields starting to drop. It looks like we're going to have a nice rally in TLT, held where it had to. And a weaker dollar, which I think is your bias, what you're going to talk about, should be jet fuel for appreciation of financial assets, right?
Well, yeah, I think so. The dollar has been stubbornly high relative to where it has been historically. Maybe we can get a different chart. Let me get a different dollar chart here.
Well, it showed that it's breaking down under what, a 200 day?
Yeah, it's breaking down below the 200-day, which we've had a few of those this year, but this time the breakdown may materialize into something more, because we are getting closer to that point. We had the jobs payrolls this morning that were softer than expected. We had those oil cuts, production cuts extended through the rest of the year, although they're going to shake it up a little bit in October. And so you really are getting more pressure now on the Federal Reserve to consider dropping those rates. And that seems to be showing up in things like the dollar index, where we've had this stubbornly high dollar. And it overall, when you really think about it, why is this dollar so elevated? Well, because, the dollar, as you well know, Dale, is the price of money. It's the price of money. And so if rates are up, interest rates are the price of money is what I mean. And so if interest rates are up, then, the dollar is going to enjoy that. And as expectations of that declining interest rates, as those begin to really creep in and become more real for people, that dollar is going to gently I think, gently come down. We expect it to come down into this 100 to 101 area, which is where we were at the end of 2023. It was where we were in the middle of 2023. It's not too far of a stretch. And when you get back down there with the rate expectations to be coming down, well, then you've got $6 trillion sitting on the sidelines in various types of cash or cash equivalents. And so that money can come back in. There's a lot of people who are sitting on the sidelines. They've seen the S&P 500 hit a new all-time high. They've seen the Dow hit a new all-time high. They've seen the NASDAQ 100 hit a new all-time high. And yet many of them are still skittish. The other thing, I really like your TLT idea. I do have a TLT chart in here, I believe.
Bought them last week. Leave the dollar chart up for a minute, Jared.
Sure.
So
Yeah.
I see your targets down there. I have a lot of conviction it's going to take out par. So if it does so, and you have a little dotted line there, the high was 115. Ballpark, call it, par, and we moved sideways for a year and a half, 2 years.
Yeah.
Okay, that consolidated the decline. I don't think it's a base. I think it's more distribution. So if you take 15 points from your breakdown at, say, 101 under the line, you get 86.
Yeah, and that would be, let's go back and here's another chart that kind of shows you exactly that, where this area right here is really the area we expected the dollar to get to within 12 to 18 months. So that 86 to 87, 88, somewhere in here, that's when you begin to have rate cuts. And that's the nice thing about the whole backdrop here for investors, is that as we have those rates coming back down, which we know they do, you and I have lived long enough through this to see that the Fed raises rates. Why? So they can cut them. And why do they cut them? So that they can raise them. Like, it's the tool that they have. And at some point over the next, 3 to 5 years, I would imagine we're going to have something that's going to require the Fed to push rates down to as close to zero as they possibly can, as they love to do. And that's just going to be, like you talk about, rocket fuel. That'll be rocket fuel for so many assets. And so as I look out for the rest of the 2020s, I am very bullish on asset prices. And one of the things we encourage people to do at our website, followthemoney.com, where I've been educating for the last 15 years, is trying to get people to understand that if they don't have assets, that they're going to be in trouble, that you have to own assets in this economy. You simply do, even if it just means just getting started by dollar cost averaging a little bit into various assets each week, each month, whatever. But you really do have to have assets. You're so right, because when we look back over the last couple of years, if you didn't own assets, you're right, this is a terrible economy for you. It's not that great. You're just kind of grinding sideways, if that.
Yeah.
So very good points.
So you have okay, so some more dollar stuff.
Yeah, just kind of building the case that we're really in a long-term bearish channel on the dollar. Right. So this recent enthusiasm is really all just playing out at a lower high. It's really important to keep that in mind. And then back to the S&P for a minute. Sorry for the scramble here with these charts. It might be hard on the eyes as I scroll, but so we just had that dollar breakdown below the 200-day. Will it hold? We'll see. There's plenty of there's growing fundamental picture that we really could begin to see a weaker dollar going forward, even more than we've seen. But then you have the S&P 500, which is trading below a new high and just recently bounced off of the 50-day moving average. We have Apple coming up in just a few days with their WWDC. They're going to be announcing new AI features in the iOS. We think that's going to push Apple back up, which we own. NVIDIA is dragging the whole market higher as well, and we think that is firmly intact, albeit not straight up. And then when we look at this particular chart, for example, this is a very useful chart I've been using for so many years. It just shows you the breadth of the S&P 500, which shows you we're still in bullish territory. So For all the hand wringing about where the stock market is and, do we have more upside or all of this? Well, we really do. The last time we got to the take profit zone was back at the very beginning of April. And we had alerted our members and said, look,
Oh, nice.
we're in that kind of frothy place where taking some cream off of the top is totally justified. And then, of course, it did fall. Anytime you get more than, this is just our analysis, but anytime you get a little bit more than 80% or more in the of stocks in the S&P trading above their 200-day moving average, you're usually due for, it's usually you've had enough. At that point, take some cream off of the top.
Yeah,
It
that's a
usually
nice
doesn't.
tool. That's a real
Yeah,
nice tool. I like
thank
it.
you. Yeah, yeah. And then anytime, of course, you get down here, say especially like in 2022, where we had this,
Yeah.
extreme move. I mean, it was just a great opportunity, for folks to
And
get long.
you're not a revisionist. You were bullish. I remember.
Yeah. Oh,
You
no.
were
I mean,
talking about all through that year, and we were talking that year
yeah.
about all the great levels that things could be bought at.
You really, really, very good. And for example, here, this particular chart shows our uptrend alerts that we had issued. So at the very beginning of 2023, we issued an uptrend alert, and then we did that again in June based on the monthly chart, and we just haven't lost it. So our conviction really is not based upon anything external. It's not really based upon anything fundamental as much as it is just literally technical. The charts just continue to confirm an uptrend in the
Well, this
markets.
is how I come up with 6,100. You take the October 22 low, and you call 4,800 a breakout, and you tack that on top of 4,800.
Well, there you go.
And that gives you a 61.
Well, there you go. And I don't think that's off the mark. What is your expectation for time on that? How
I
long
think
do
it
you think
should
it
do
takes?
it by the fall.
Oh,
If
wow.
it's going to go, it better go now.
Yeah, I think you're.
Let me ask you this, though, Jerry. Here's my sister, and she's an amateur, and a lot of people are worried about this election season. So she told me she's going to sell in October and get back in after the election. Now, that seems a little bit too pat for me. And what makes me think that there could be a surprise is I think a lot of people are thinking like that. So what could throw them off? What could throw them off is a break before October, sometime this summer, because they're not planning for it. So, I'm torn between the 6,100 level and, also think 55, 56 might be it too. So I think there's a break coming, but everyone thinks they're okay through October. And then they'll just get out and sidestep the election. And if it was that easy, I'd be a billionaire by now.
Right. Well, there were a
Right?
lot of people. Yes, you would. And there's a lot of people who tried to do that in 2016, and boy, they missed out because it was a rip-roaring rally. And
I
I think,
remember that. Limit down,
yeah.
and then Carl Icahn left the celebration and went and bought 10 million S&P futures contracts.
Oh, and it just ripped higher. And that's the thing about both of these candidates is that no matter who you like or no matter who you don't like, both of them are good for the stock market, both of them. And it's hard for people, I think, to agree to that, but they have to look at the data and say that's true. I mean, if you look at Biden, for example, the all of the markets have hit new highs underneath him, like him or not,
Yeah.
like him or not.
That's a good point.
Your 401k is going up, and guess what? If Donald Trump wins this time somehow, then what we end up with is Wall Street exuberant because they know that he's not gonna do anything. It's like Keystone Cops on Wall Street. I mean, so he's not going to do a thing. So you're going to see the animal spirits come out outrageously if Trump wins because then they
But if
know.
Biden wins, he's talking about a 40% capital gains rate
Oh,
tax.
he's talking. Where is
He's
it?
pandering.
He's pandering. Of course he is. Absolutely. Okay. I mean, yeah, this is all pandering. And so as far as the stock market goes, for those listening, this is just my humble opinion, is that trading based upon politics is just not a good idea. Oftentimes, in fact, I had a chart I just showed. I wish I had it. Boy, it'd be great to show right now. But it showed that going back to say 1950, so ever since the foundation of the S&P 500, if you put $10,000 in, I remember the numbers, put $10,000 in, and you just held it. Well, of course, it soars to something very, very big. Obviously, a very big number. But if you only held during Republican administrations, that $10,000 only goes to 100,000 over since 1950. Okay, and then, or if you just held, if you said I'm only going to hold during Democrat, presidents, well, during that time, I think you turned it into 300,000. But if you just would have held the thing, you would have turned it into over 1 million. And so the point is that we often try to outsmart ourselves, and outsmart the market, by getting in and out, in and out, in and out. And that's fine for a trader, but for your long-term investments, it's just good to stick with high quality companies and just sit.
I've heard, things like the dollar does better under Democratic administrations,
as does the stock market,
and worse under Republican.
Yeah, that's true.
That's just a dollar. So anyway.
Yeah. Well, even the stock market does better underneath Democrats. It's just historically, But
so
okay,
you see no end to this bull market.
No, okay. It doesn't matter. It doesn't. Are either one of them going to not print money? Are either one of them not going to prop up the stock market? I mean, in 2020, Trump threw everything, including the kitchen sink, at the economy like we have never seen. We got a bull market that rallied all the way into 2021, based upon all of the shenanigans that went on in 2020, all the checks that were mailed and all of this. So Trump is in no way, shape, or form some sort of libertarian who's going to come in and pay off the national debt as he promises. That's called pandering as well. So both of them are going to max out the debt.
He's talked about defaulting on it.
Yes, and he's more likely to do that than to pay it off.
Yeah, that'd be pretty bullish. The dollar, right? Huh? Hey, I could we take a look at your metal charts, Jared, and see what you're seeing there?
You bet. So let's see. Let's look at silver first. Silver is holding on. There's a really important number that we follow on silver. It's the 30 SMA. If you're looking at a daily chart, the 200 and the 30. 30, for whatever reason, it just really reacts to that area, and we're getting ready to possibly hit that maybe this morning if we pull back. But 30 was the really key support level. The 30 SMA becomes the next support level. So we really want to hold on to about 28.50 here on silver. If we break down more than that, that's going to indicate that some of the conviction in this trade has just kind of evaporated. And I don't think that there's really a justification for that, because for a couple of reasons, I see silver going up to about $50. That would be back to its all-time high, which is kind of ridiculous. Right. It's one of the only metals or only commodities that hasn't hit its former high. But overall, silver is needed for EVs. It's needed for solar. It's needed for all of these different things. And what I think the big elephant in the room is China. And China has been struggling economically, of course, as we all know. But things are getting better there. And don't expect the U.S. media to tell you that. Their job is to constantly berate China, talk about how backwards they are, talk about how they can't, put one and two together, how they're probably going to go away in the next year, how they're completely communist, and all of the talking points you hear from the normal Western media about China. But
they did report on a successful lunar landing on the other side of the moon that we were never able to do.
That's right.
And they're bringing back rocks from that side of the moon, and not bringing them home, dropping them off at a satellite. So it used to be a space race between Russia and us, right?
Right.
China's just, they look like they have it together a little bit more than Elon Musk.
They've really got it going on, and they're doing better than the West really lets on, and so their economy, from our data that we see, is improving, and that bodes well for the global economy. That bodes well for demand for oil and for silver and for all these other things. So overall, any weakening we see in the United States economy, which we do see a deceleration, especially with jobs numbers, and this is what the Fed ordered, that they wanted this. So we're starting to see a deceleration of the U.S. economy. But I think the deflationary pressures within China have been so fierce and strong that it's causing consumers and consumption to really rise. And so I think we're going to have a kind of a washout. So even if the U.S. decelerates, China, I think, is going to pick up the slack. So I don't think we're going to see a major shift.
They've done that before.
Yeah,
they did that in
right.
08. 08, they're the ones
Sure,
that pulled us out of it.
that's right.
Are there any other like commodity charts? Oil looks kind of ugly, but things like the softs. Are you looking at grains, copper? Because if we're going to have a bear market in the dollar, it should be supportive of commodity markets and maybe even jet fuel for those markets that are having weather issues.
Yeah. Well, yes, we are bullish on copper. DBB is one ETF we like to
Okay.
follow, which covers aluminum, zinc, and copper.
How
Copper's
about
had a little.
DBA? How about
D,
agricultural
DBA
commodity?
has been DBA has been very hot, very hot. When I look at DBA, I see a market that's overheated. That's one of the few markets that I see is overheated.
Okay.
But DBC, no. But DBA, yeah, DBA has had such a run that I would be afraid to pile into that one here. If you look
Okay.
at, say, gold, for example, gold continues to hold its highs. It's struggling at that 2450 level, and very instructive technical. Maybe a quick lesson here for those watching. But you see these long wicks. Many of your folks probably
Yeah.
know this, but I
Yeah.
always watch for those long wicks. When you get that long wick like that, it rejects higher prices, and you often will linger for a while. We got a couple of those. And we've been kind of consolidating below those wicks, which were up to about 2450. So we may consolidate a bit longer on gold, but a deceleration of the dollar may, shorten this and cause it to go
Yeah.
back up. So
You don't
that's one
think
thing.
we're going to see that support zone again, do you? 2100,
Maybe,
2150.
yeah, I would expect maybe just a pullback to it would probably be constructive if
Yeah.
if it meanders here, but I wouldn't
Yeah.
expect it to go much lower than that. No,
Yeah.
no,
I don't even think it's going to get down there, but
yeah.
it'd be okay.
And I also have a TLT chart because I know you've been talking about that. Let me see if I can grab that real quick because
Okay.
I agree with you. There it is. Okay, so on TLT, we have an 80 to 85 support range, and we actually touched that in 2023. You can really see that we're in a bearish channel here.
Right.
I don't know your full thesis, but from our perspective, with rates obviously coming down, bonds have been destroyed, and that seems to be the big news. The news is that TLT and and many of these long-term bonds have been decimated. Well, to
Yeah, they
me,
have.
that's an opportunity.
And they
That's an
bottomed last week on failed auctions or very bad auctions in the market, and they still came back.
and they still came back.
So I'm thinking your dotted line, Jer.
Yeah, the dotted line is probably the next, that's the big resistance there, what we
There'd
would
be a
run into.
quality from the first rally low we had, and this is
Yeah.
a higher low, about 61.8. Almost has a look of Head and Shoulders bottom with a down
Yes, it does.
slanting line.
Yes, it
So
does.
yeah, so that would measure pretty good too.
And you've got this incredible volume coming in over the last, half a year or so. So it's been really nice. The other bond ETF we like, it hasn't suffered nearly as much, is VCLT. Let me see if I have it down here. I believe I do. Yeah, there it is. Here's VCLT. So this is the Vanguard Long-Term Corporate Bond Index ETF. I don't own this, but I like to follow it because
That
it's
looks good too.
high quality bonds. Yeah, it's really
Yeah,
come down. I mean, you're able to get it at where it was, say, back in 2017 right now, or,
yeah.
2019. So and this one's a high quality, ETF, high quality long-term corporate bonds. And with rates, going back down, the
Let's
price
see
of this is
your
just going to go up.
yeah. let's say your uranium chart. You passed it. I'm curious what you're looking at there.
Uranium, yeah, we have a couple of charts there. It's like uranium
There's
URNM.
uranium. Okay.
Yeah,
Sprott. It looks heavy, doesn't it?
it does. It looks a little heavy. It's been lingering up here all year long. It's been kind
Yeah.
of struggling below 60. And then also, you can see we had a cup and handle pattern here on URNM, but
And it
it's now,
failed.
yeah, well, maybe it's got this 50-day support. We'll see
Failed.
if it could bounce.
I
It
think
could
it's
bounce.
I think it's being pressured with the weakness in crude oil, because
You're right.
it's an energy play.
Yeah. And then we have Uranium Energy Corp. I don't own this one either, but I like to follow many of these
I'd
different
buy it
companies.
at the dotted line.
Yeah, and it's almost there. It's
No,
almost
the
it's
lower dotted line.
oh, this one here. Yeah. Well,
Yeah, that line.
woo, yeah, that would be nice. That would be
All
nice.
right. Well, you write that down
Okay, we'll
for
do
our
it.
for our next visit, and tell people how they could follow your great technical work, Jer.
Hey, thank you so much. Followthemoney.com is where people can find us. We have a free podcast. We have a free YouTube channel, of course, lots of videos on YouTube. But then we also have a membership here. We actually have a 25% off for life. You can use the code 25 now, right now. Just simply come over and check out what we have. We offer a trading software. We offer ongoing trading education, daily swing trading ideas, daily position trading ideas, all that stuff ready to help people make money in this market. And we always appreciate coming on here, Dale. I appreciate your good work.
It's interesting. You have a trading. You have the capability of a trading mentality, but you're also, for our kind of business of looking for trading opportunities, you also have the knowledge of what a financial planner would do. So you're teaching people not just how to make some good trades, but how to accumulate wealth. And
Mm,
that's because you could be a great trader, and if you're not managing it right, and you're not diversifying it right with your trading profits, it goes away. So
mm.
anyway, check Jerry out.
Thank you so much,
If
Dale.
I was a neophyte, and I was looking for somebody to help me with just trading and how to accumulate wealth, I'd be talking to Jerry.
Well, it's a
I don't have
huge compliment.
yeah, I don't have enough money to be one of Jerry's
Oh,
clients.
come on, Dale.
Anyway, bless you, buddy. Lots of pips rain down on you and your people. And
Yes.
it's always great to talk to you.
Always great to talk to you. Bless you, brother. Thank you.
All right. So Jerry Robinson, everyone. And you can find him on X at FTM Daily. Follow the money daily. And that's what most people follow. I follow a few other things. So anyway, have a great day, everybody. Good luck today. I think the Bank of Canada's out, and pretty soon. And let's see, 2 days to NFP. So that's a wrap. Thanks again, Jerry. You could join the team in 12 minutes on the morning edge. So go take a shave and get in there. Okay, sir, Zach. Hope you enjoyed F.A.C.E. Adios, everyone. Don't just count your pips, count your blessings.